Hey guys, doing a video today on seeking underlyings to sell puts, that is. So if you look, the market, this is the S&P, market is up, volatility is down, so there's not a lot of opportunities to sell premium. If I show you the VIX is around 14.8. If you divide it by 2, that means maybe you'll get 7% annualized return if you sell the puts. Call side and put side combined is about what you get in the VIX number. So that's a wimpy return. If you look at a lot of stocks, you're barely getting between 5 and 10%. So I ran a screener and I looked at stocks between $1 and $10, and I sorted them by volume. And lo and behold, I found the UNG ETF. I don't know why I didn't think of this one sooner. I know I like the UNG ETF, so let's go look at it. It's not the best futures holding asset because of the rollover. You lose some value month over month, contract over contract, but it's good enough to trade options on. So this UNG ETF was $32, went into the 5s. Summer months and winter months should be bullish for natural gas, and the trend down is slowing down. So that's good enough for me. And then if I look over at the options, I have the 7s as an example because it's close to 686. These are representative of the at the money. They are juicy. If we're gonna say August, it's almost about 10% for 1 month. You can get 10% premium selling the at the monies for 1 month. If you sell them for 6 months, you almost get 20%. So you can imagine the volatility. Do I recommend it? No, it's not for everyone, but it's something to do while the market figures out the next step. So that's just an idea. I don't know if I would sell the at the monies. I think I'd be okay selling the at the monies. I might even sell 6s or 650s. I do think this UNG has a good chance of going higher sometime in the future. Who knows? I can't predict the future, but I'm willing to hold it. I'm willing to sell puts. If we go back to the puts, the farthest out, which is a year and a half, is over $2, which is $2 out of 6 and change. That's a huge chunk. Is that like 30%? It might be 30%. So covered call strategies also work if someone wants to do that. I mean, imagine buying buying 100 shares of UNG, almost $700, and selling for 6 months a 7 call. That's a decent return. It's almost 20% for 6 months, and it's a covered call. If it goes up, you get called away. If it goes down, you keep the premium and you keep the shares. One more look. I'll look at the 1 year. Yeah, see, this is that contango. The UNG ETF really gets wrecked in the sell-off. If we look at the actual, this is the back month, natural gas, it's almost at extreme lows. So we'll see what it wants to do. But that's an idea that I'm considering. I wish I had done it sooner, to be honest, but in this environment, it's really hard to find options to sell anyway, and that might be a candidate, might be an idea. Not advice. I don't know your situation, but it's something that I'm looking at to sell puts in this market. Cheers.